Hey everybody, welcome back to Traders Talk, today's market. My name is Mike Fairboard. Good to be here with you today. Stepping in for Kevin Horner. He will be back, next week, the next broadcast time for this event. But hey, looking forward to a discussion with you all today, looking at the markets and just taking a look big picture. I want to take a look at trends specifically. We're going to look at some linear regression lines as well. We're going to throw some Fibonacci in there. And then in addition to that, of course, moving averages, but I want to talk specifically about what's really been moving in the market, what's been moving up, what's been moving down. Is there a divergence there as we look at breadth of the market as well? So look forward to going through that with you today, joining the chat by my good friend, Connie Hill. Folks, any questions, comments you have, definitely throw those into the chat box. You can join Connie and I, by the way, on X. I'd love to have you join if you are interested. My handle is just Mike Fairborn CS, and Connie's is Connie Hill CS. So with that, great to see you all. Let's go ahead and hit some disclosures to get going here. So first off, wanted to state the information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. In addition, let's see, specific securities used to demonstrate analysis trading functionality are used randomly. All security symbols, names, and market data are shown for illustrative purposes only and should not be considered an offer to sell or solicit or solicitation of any offer to purchase any security or recommendation of any strategy. Past performance is no guarantee of future results. And some additional notes here. Investing does involve risk, including the loss of principal. Now, we're going to be taking a look at the Paper Money application today, Paper Money software application. That application is to be used for educational purposes only as well. Okay, so some additional notes in there, but that should be it in terms of what we've got for disclosures. Oh, one more, I'm sorry. Quick note, all ETFs are subject to management fees and expenses. Investors should consider carefully information contained in the prospectus. Some more information on that. All right, well, having said that, let's go ahead and dive on into this right now. Looking at the S&P 500 index right now, and you can see up top here, we've got this range that we've touched up on a couple of different times, and then we've bounced back down to a lower range. Now, if I do, clearly though, the trend, was higher in this sense. We did make a new high here, right? A new all-time high. We came off that top of the end of the range, but then we dipped back down, and you'll notice that one thing did become apparent there. As we dipped lower, as you can see, we did actually technically make a new low. So that is a new low right there. It is a new low. Of course, this was a higher high. We'll just put HH up top. But that was a lower low on a short-term basis. Now, that's not too unusual. Where you really start to see a trend change is when you start to get a lower low, right? This is a lower low reference to this point, but really we're getting a lower low down here and a lower high. Now, that is technically, by definition, a change of trend. And we do not have a change of trend here. As of yet, we do not have a lower low and a lower high. So just one big picture point to keep in mind. That's pretty much true across the different major market indices as we look at those. So the trend, and I bring that point up because we've had this trend in place for quite some time now. Obviously, if I go back for the last 1 year, wow, clearly a 1-year trend. I think if I go back to a 2-year, 2-year, still, clearly the long-term trend is up. If I zoom back to my 1 year, we can get some indication of where that support and resistance might be by using linear regression lines. I'm going to click on just the other studies right now. We'll add one in. So linear regression, again, if we click on this right here, what that will do, it does give us a little explanation here, but it looks at time over price and it plots a mean line. What is the mean of time over price? Folks, that is your middle line right there. Let's just get a different notification on that. I'm seeing a whole different group of folks in this room today that I don't see normally in my class that I teach on Wednesdays, which is market and sectors. And so I'm just going to go ahead and explain a little bit more quicker details just so you're all on the same page with me. But that would be the mean of this 1 year time frame, okay? Just like a statistical mean. And then above that line, you've got one standard deviation to the upside and one to the downside. Of course, we're using the 50% channel of the linear regression, which matches pretty well what we have here within this longer term trend. But you can see that what it will do is it will try to highlight. It's interesting because a lot of times prices can move off of a deviation from the standard mean. Okay, I had drawn one in differently up top here, and we've kind of come back down off that level. But you can see over here, we did bounce off this level right here, off that point, which had been in place for the past 1 year, and we did reverse off that level. Now we are coming back to the mean, and you may have heard prices reversion back to the mean. Well, sometimes you can find resistance at that level if you're below it. You can also find support if you get above it. The clear thing is, though, big picture is that we are still driving here with the direction of the trend. We're in the direction of the trend going forward, and that's a positive, all else equal. Okay, to the end of the year. We'll see what we do get towards the end of the year. I'll look at seasonality in just a bit, but generally we do tend to get some strength heading out towards the end of the year into January. We'll see if that remains intact. Now, let's move over to the NASDAQ real quick with the same regression line. And you can see with the NASDAQ 100, we did bounce off our lower channel level, but we do have some of these levels up top here, and clearly we broke above this level in terms of a deviation above our standard mean up top here. But you can come over here and just see, this prior high and the regression line. Could there be short-term resistance there? Remains to be seen. I've gone ahead and just kept these additional lines on. You guys might see these orange lines, kind of yellowish orange lines. That represents an ascending triangle. And we did break up above that triangle, but then we broke back down below it. And, there could be resistance at that level again as well. But clearly here, the trend is up and we do not have a lower low and lower high. So just wanted to say, broadly speaking, the trend is clearly still intact, but those linear regression lines can help when we're looking at possible support and resistance levels within the trend and really within this longer term channel. I like to throw those on when you're hitting new highs, whether that be in a stock or an index, for example, because it does give you sort of a resistance level to kind of keep eyes on, which we had been touching off of on the NDX, but not so much the others. Quick note, let's look at the Dow here. And so similar to the S&P 500, we've kind of tested off that lower level. And will we get a change in trend here or not? We did break some lows. And finally, on the rut, off of the lower channel line. Now, generally, as I said, it can be some indication that traders might look for when they're looking for a break. Back up above that linear regression channel, back up to the possible mean or the upper channel line up top here. Okay, so just a couple of different lines to keep an eye on as we have really been trading within this longer term channel. They can be, and as you can see, there have been quite a few touch points along these levels. S&P 500 really matches the best over here. And there we go. So with that, though, let's go ahead and take those off. You get too many lines. I'm of the belief if you get too many lines on the screen, it's just hard to be wrong, too. So you can't just keep piling on. You can always find a line that tells you something if you have too much on there. So you kind of have to just see where prices are trading at relative to whatever indicator you're looking at and just kind of go from there. But having said that, let's go ahead and take a look at the some of the moving averages we've got on the chart here. Here is a 20-day. I want to throw the 20. Let's go to the 20, the 50, and I'm kind of old school how I add these in. We're clearly above the 200 on these still. So I'm not going to throw that in place, but we'll take a look and see where we're at right now. Longer term, you can see the S&P 500 index. You can see this lower kind of channel line here. Everybody see that lower channel? It has been somewhat of a guide. The 100 is towards the lower end of our range, and we're clearly above that now. Right, we've moved above the 50. We do have the 20 period, and generally it's the 20 that might act, and that's the red line right there. In fact, I'm going to go ahead and just zoom in on that so we can see it just a little bit better there. But you'll notice over here, it's that red line that a lot of times traders are waiting for confirmation of. The red line, the 20 period moving average, it can mirror a lot of longer term upward trends in terms of looking for trend strength. When do we get above the 20? You notice there's a lot of price action that can occur. You actually kind of hold above the 20 here. Let's do it again down here. We do it again. Notice there was this little curve at the bottom. We came below the 100, very, very similar. I should say not dissimilar to this move right here. We were below the 100 period moving average. The 100 there is in green. But then, we got back above the 20 period right there. And look how much price action, look how directional that price action was when we had the strength to get above that level. Now, folks, are we above that level yet? We're not quite there, right? We're still kind of in this sort of this curving motion, but sometimes this is where traders might look for the possibility of a confirmation. Ooh, can I type that all in? A confirmation. I'm not going to do the whole word, but a confirm. Does price get above the 20? Now, it's not always the case that the 20 might stand out on any given move, but a lot of times, hey, when you've got these channels and you've got price action kind of holding within these channels, right? They're moving up. Sometimes the 20 does a pretty good job of mirroring that moving average. Price action does itself. So keep a watch on that. I think the only other one, let's look at the NDX again on this as well. Okay, so NDX actually technically above the 20 right now. We've seen a lot more strength within the NASDAQ 100 as well. This was a big kind of a blow off top here, but we did come back down and make a higher low, held above the 50 period moving average. So we kind of talked about some of those levels that might be of interest here. Here's the upper trend line of the initial ascending triangle right in here. Of course, the linear regression was slightly above that, and then we had this all-time high as we are kind of moving towards the end of the year there. And last but not least, let's go ahead and take a look at the DJI, the Dow. The Dow was at right bouncing off the 100 itself. So we've broken these lows. The question is can we make some highs above this level? And can we start to move? Now, it was interesting because we go back on the SPX real quick. Sorry, SPX. If we go to the SPX over here, we were actually in a pretty good channel and we were holding this range right here. And it looked like an interesting bull flag. But what happened, folks, at that point in time? What was this right here? We had a Fed announcement. Now, I went back to take a look at the Fed announcement just to see what we would have on that announcement specifically. When how many times in the past have we had that? I'd only seen 3 times historically in the past did the Fed lower rates in December. So it's an unusual event. It kind of messed up a little bit of the seasonal move in the market. And one of the things too is when you get a big announcement like that, a couple of things can happen. When you get that announcement, you start to see this occur. The announcement comes up, and what you get is, okay, you got the 25 basis point cut, but in 2025, the expectation, what the Fed had made known for interest rate cuts, was a total of 4 cuts. When they came out on this announcement, they brought it down to not 4, but 2 cuts. The market didn't like that. The Fed also said that they'll have 2 cuts for 2025 and 2026, both 25 basis points each. And so about 50 basis points in total, or you could say a full percent over the next 2 years is what they guided to. Okay. Due to a little bump in inflation that jumped up 30 basis points. But if you wanted me to kind of explain, that sort of move there, first of all, it was sort of a rare event that we did get a cut in December. And then secondly, it was a little bit more hawkish, right, than dovish. So less interest rate cuts is what we saw. So just keep that on the back burner, because if the Fed comes out and talks some more, well, there could be more insight that they could provide. And, well, it's just good to be kind of mindful of what the Fed might be stating right now and how that might be looking going forward. So, okay. So just wanted to get through that a little bit as we go through there. Now, I did want to throw out the seasonality as we are on it. In fact, I think it's still going to paint. No, good. It doesn't paint the moving average. You can see over here, the standard seasonal kind of move was sort of just up and steady as she goes, kind of just historically closing on a high. Now, this does not have to happen. This is sort of the average, right, of the last 5 years is what this is. But if you look at the 10-year, the 15-year, the 20-year, it's all very quite similar. But we did have that interest rate cut, right? For interest rates right there, which did throw a little bit of a loop there. And by the way, the news wasn't always, that great necessarily. But I want you to take your eyes over here and just say, well, what on average then does it look like if you come back to January, which is what we see down below? Well, there is some steadiness, upward move. If you take out the pandemic, which really impacted prices, and 150-year event, 150-year event, generally you do tend to get a run up through March, which is exactly what we've been getting as of late. This kind of a seasonal move if you take out the impact of the pandemic. And by the way, once we get past that, like into next year, we should start to see, well, we'll see what happens, but maybe we might revert back to a standard seasonality of March. But I just want to let you know, that's what we kind of saw this beginning of this year, and that tends to be the sort of average motion of seasonality. But of course, that's made up of moves going down to the downside and to the upside. So it's just an average there. Okay. All right. So that's kind of a brief look at that. Again, that was in style and just in seasonality and I'm sorry. Yeah, style. We went to seasonality. I'm going to pop back over here into standard and we'll take a look at it from here now going forward. So a couple of things too I want to take a look at. If we look at the SPXEW on the equal weight, SPXEW, you'll notice over here that we did get, where'd you go? Let's see, let me pull that back down. Couldn't find that symbol. Might have typed that in wrong. Let's try that again. SPXEW, folks. Oh, it's up top. I'm sorry, it's right there. Okay. With the SPXEW, we've got a little bit more of a dip and a little bit less of a recovery. As a matter of fact, we broke down here on that announcement, it looks like, into a new low. And that's really kind of a bigger dip. And that all we're doing here when we talk about the EW, the SPX EW, that just stands for equal weight. And so we know that the SPX itself is a market cap weighted index, right? And so the bigger cap will have more weightings, the larger the capitalization. But down here, we're looking at an equal weight, and that dropped. And that's just like looking at all 500 S&P 500 stocks equally, okay? So in other words, there's not a market weighting associated with them. If I go to the Visualize tab, you look at the 500, yeah, some of these blocks are just bigger, and some are really, really, what's this one? I mean, it's so small. That is TFX, for example. Incredibly small, doesn't have much impact on the market, but it does if you put it on the equal weight. And so we just saw a bigger dip there across the board in that group. So just be mindful, we're making all those blocks equal when we look at the equal weight. And that was a little bit weaker, as you could see. All right, so let's do this. I'm going to go ahead and take a look up top here at my standard market forecast review. I wanted to point out to everybody as we go through this. This is what I kind of review on Wednesdays generally. I do, and looking at it, just a couple of points to note. There is this advanced decline line, so looking at advancers and decliners, and we are using the NYSE as a guide here. So it's a larger basket of stocks, about 2,800 plus companies. You'll notice though that we've been holding up really nicely here. But there might be something to, let's say, for example, the SPX EW dipping the way that it did, because we didn't hold up for long, and we dipped. And so in order for trends to really stay intact, longer term trends, like we have over here, this is quite long term, you want to have breadth in the market. And this is a really interesting and pretty good guide to that breadth, the advanced decline line. Okay, you're looking at advancers relative to decliners, and what were we seeing? More advancers than decliners over that 2,800 plus, and that's an approximate, it's like 28.5 or something last time I looked, companies in that group. So it's a broader base, but it was going up, and we were using that as a reference for the S&P 500 for strength. And we'd seen that for quite some time, actually. Look at this. We just seen strength, but now we broke down. So that's new, sort of unusual. It doesn't mean it's a negative necessarily. I mean, it's somewhat a negative in terms of the advanced decline line, clearly. But if the trend reverts back to the upside, that could be a positive. The McClellan oscillator, right, built by Tom McClellan, says if you get below the minus 100, which we did do, and then you extend up above the minus 70, right, above that red line, because the red line represents the minus 100. Okay. Uh, it's kind of maybe a little tricky to see, but if you get above that, what you can see, what you'll get on this is actually a pretty, I mean, McClellan would say, according to the indicator, 2 to 3 week move. And that could be an interesting move up into January, but you're going to have to see that line get above the minus 70 according to the McClellan oscillator. Okay, that's the REW, the SPX EW. I want to take a look at the another gauge. I've got a couple more to look at in terms of breadth here for you. This is the Hindenburg Omen. We generally will look at this on a weekly chart. I'm going to go to a 3-year weekly. You'll see that there was a spike there. Now, you don't get these spikes too regularly. The last one we got was in, let's see, well, that was, okay, so end of July. Okay, you got one end of July. And what this means is a fracturing of the market. It means you're getting a fair number of 52-week new lows with your 52-week new highs. Okay, and when you get this combination, it represents what can be a fracturing in the market. So you're starting to see fewer and fewer companies make new highs potentially, but more make new 52-week new lows, actually 52-week new lows. And then you can get a little bit of a breakdown. And when you do that, you get that Omen spike that comes up right there. Okay. A good example of the Omen spike is the initial change of a trend over here. In fact, if I go to a little bit longer chart, let me show you the 5-year weekly real quick. You notice over here, just the sheer extent of these spikes, you were getting a lot of 52-week new lows is what you were getting with some 52-week new highs. But as you were getting that, notice you were also getting on a weekly chart that is, the beginnings of a lower low, lower high. Are we anywhere near that right now? Folks, we're not. But if we start to, like I said, break a new low over here, this is a weekly chart. So this is just an area to be mindful of. And we kind of pointed this out on a daily chart on a bigger, we blew it up so you can see it a little bit better. But if you start to see a lower low and lower high, plus some of these Omen spikes, oftentimes, not every time, but oftentimes it can mean weakness and you might just get a pullback. And it might pull back to maybe the next major level of support on a weekly chart. Notice over here, that weekly chart level could be right here, although there is one a little bit higher around the 18,000 mark on the NYA is what we're looking at. This is actually on the NYSE, but the NYA is just the symbol for the NYSE. You notice how this one right here, this level, pulled back really close to these lows. I mean, these lows were represented over here as these highs. Sometimes you get a big pullback like that. So it just represents a larger term pullback, but that can mean something when we are looking at a daily chart, right? Those weekly moves can be quite large. So just something to keep an eye on there as well. The final point I wanted to note is still sticking with the NYSE is another breadth guide. I do have these comparison charts over here, and this is really just looking at NYSE new highs. Now, how many new highs did we get? Are we getting just as of like right now? We are getting 11 out of how many stocks? About 2,800 and change. Okay, approximately for the NYSE, 11. Now, what we got every time we'd made a new high over here with our trend in the purple line, we've been clearing about 250, and that's kind of been in line, kind of as an interesting gauge for us to kind of take a look at. And that's something we've been talking about in that Wednesday class. That really just kind of let us know a little bit that the trend may still be intact. So it's another sort of breadth indicator that we might continue to make new highs just because you're getting a larger group of companies making new highs. And we are actually getting highs and these major spikes. Then we got this major high over here. And after that high, well, the market began to spike over here as well, too. Okay, so a few things to kind of consider there as we look at this, as we break down this as well. Okay, so yeah, oh, hey, we've got 12. We've got one additional one that made a new high. Interesting. So anyways, there you go. We can always look these up too. We have the tools to do so if you ever wanted to see what is making new highs, what in the NYSE is making new highs. But remember, you're going to see some of the bigger names out there too, like that we've seen hitting highs in the high range, some of the big tech stocks as well. So those could be up there. All right, so let's do this. So we've gone through a few of these. I did point out seasonality, and we kind of got through this. Now, there's a couple more charts I wanted to show you all for sure. But before I do that, I also wanted to take a look at our grids and break this down to the sectors. Where are we seeing sector strength? And specifically breaking that down, I want to look at sectors, but I wanted to look at, say, for example, over here on the sector. I'm going to detach this to give us a little bit more room. Let's see. Detach. There we go. There it goes. Okay, pull it up on my other screen. There we go. These are all 11 charts within the S&P 500. These are interesting to look at because we do get trends built into these as well. And you can see where maybe some of the strength could be going forward, at least what's been holding up. Infotech has clearly been there. Discretionaries have been strong. I would say that the staples, kind of a defensive type play, has been in a channel. And this is interesting too, because if we do get a breakdown in the market, sometimes these can look positive. They can become a little bit stronger. Also, healthcare can be, it's a defensive type play. Has historically been defensive sector. And you could start to see possibly a move over here too. We'll keep an eye on that. But the three strong ones, I'm going to highlight these in yellow. So I think we'll clear this off. I think, discretionary, the trend has been up. Financials, I'll say I won't put financials. We did kind of dip down a little bit. I would say for strength, infotech, and then communication services. Kind of in that group right there. All right. Well, I want to do this as just kind of a fun exercise here because infotech happens to be, one of the big broad categories where we've seen a lot of like tech stocks that have really kind of shown some strength. Let's take a look at what's in there, but what's really been moving over the last 2 weeks and really what might be keeping the market up. And it's important to keep an eye on that because if those companies were to break down, well, that's kind of what maybe might be giving a lot of sort of strength to the markets as of late, despite a lot of weakness across the board, right? On a bigger scale. So let's use some of the tools. I'm going to show you how we can take a look at this. In fact, the first one I want to use is actually just the standard Market Watch tab here. And let's go into that right there. Yeah, hey, Carol, did you want that chart? If you, I just saw it. Yeah, if you like that chart, folks, I'm just kind of keeping an eye on the chat here. Really appreciate Connie helping out. Thanks so much, Connie, for that. But I want to do this right now. I'm going to go ahead and let me just get back to that. I'm going to just share that. It's not a script. And so I could just, it's just charts in here. So I'm just going to go ahead and hold on. You know what? I'm going to go back over here. This is just a good, quick way. Everybody, if you want to take a look at the sectors in the S&P 500 plus, it's got the S&P 500 here too in the bottom right-hand corner, which all these together, right, combined together, help to formulate the chart of the S&P 500 index. So let's go ahead and just share that grid right now with you. Let's see, sector grid, there it is. Okay, and I'll throw that into the chat right now. In fact, for those of you joining this or seeing this, sorry, one second. For those of you seeing this in the archive section, just I can have this posted down below as well for you in the description section under more. Okay, so there you go. Okay, cool. All right, let's do this. I'm going to jump over here now, and I wanted to go back and show you under the Market Watch tab. Under quotes here, let's get a full screen and take a look at this right now. So you'll notice that, well, let's do this. If I take a look at the S&P 500 index, SPX again, right there. So here's our SPX. And here is that upward move over here. But we did see that, yeah, we did break a new low in here. What is the strength and what is the weakness? What do we have in terms of strength and weakness in terms of the underlying stocks within some of these sectors? We saw that the technology group was the strongest for sure. So what I'm going to do is I'm going to go over here and we're going to go back to our Market Watch tab. And I'm going to show you how we can break this down a little bit more. If I go now to the S&P 500 and we want to see what is moving, here it is right here at the bottom. There's the 500. And you'll notice over here, I've got a lot of, I've got to take out some of these custom indicators right now because we're just not going to there's only so many custom expressions it's going to allow. And I've got way too many. We'll do the MACD cross. We'll take that. Leave a couple of these on here and see what we do. See what we get. Okay, it allows for those because we were looking at 500 companies, right? So there's a lot it looks at here. Now, over here, as we look at the 1 week, a quick note on this. If we go back to the S&P 500 again real quick, how many weeks had we been going down? Where was the weakness at? Well, I would say it was probably over the past 2 weeks, probably 2 week time frame that we saw over here, at least in terms of weakness. So what's been holding up the best over that 2 week time frame? Let's go to our Market Watch tab. I've got this set as a 1 week right now. I'm going to right click on it. I'm going to customize this formula. So I'm going to edit it first. Edit it. I'm going to pull this up so you can see the formula, and I'll go ahead and share this with everybody too. But let's go back a full 10 days on this. I'm just changing. This is the number you need to change. This is the look back period. And you'll see that in these brackets, and you can adjust these here. So I'm going to go ahead and throw this in right into my bracket, and I'll share it. I just wanted to show you this so you can make adjustments yourself as you go back and look at it. Okay, it's dynamic, so it's going to pull it off of what we're looking at right here in terms of the S&P 500 index. But let's go ahead and just pull it right now, and it's going to load that back up, and we're just going to see where that strength comes in or the weakness, because we look specifically at the chart, right? What was the chart doing? The chart was doing one of these. It went up for about a 2 week time frame. Now we've come up a little bit, but what was going on in here, and where's the strength right now over those 2 weeks? What's been the leader in the group? Now that we've got that down, it does say 1 week. I apologize. I can change that too, just so we don't confuse anybody. I'm just going to go back over here and change it because I did update that to 2 weeks. Down below, you can see 10-day back, 10-day back. Boom. We'll click on OK, and we'll reload it again. We're really drawing on it, aren't we? We're drawing on the resources here to pull it up. Okay, that's cool. But let's just pull it. We'll click on it. And so let's just see. Oh, we know what the losers were. We know what the losers were too. Really interesting to know. Where might the weakness be? Where could some of those new lows be coming in at? You're down 20%. You might be getting 52-week new lows, right? I can have a 50% new low column here too, if we wanted to as a reference, which might be a good idea going forward. Actually, in my class, I think you guys just, I walked through an area here that might be interesting to take a look at going forward. But so this is in percentages, and you can see Broadcom, okay, Palantir, Tesla, Jabil, I believe, or Jabil, Teradyne, Darden Restaurants, areas here where we can see strength over a 2 week time frame. We want to see where we've been finding strength. Well, I'm going to have a column over here next time I do this. It won't be Wednesday because tomorrow's Christmas, but it will be, I will take a look at it in that class, but we'll have a 52-week column we can kind of compare and get some ideas as to what's really moving here. But this should be pretty good. And let me just take a quick look at it, just so we can kind of see right now. Let's look at a few of these. I have a really good idea that Tesla's been moving up. AVGO. There you go. Does that look like a 52-week new high range? Clearly it does, right? So you've got that over here. Some real interesting strength in here. And by the way, could be one of interest. PLTR was another one that was on that list. We're right at a high today. 52-week new high today. Could be an all-time high today. Not for sure. And then Tesla, right? There's your Tesla mover coming off 52-week new highs over that time frame. So now we've got some ways to kind of, for each of you to, find some strength too, as you're looking at this out there and kind of comparing that. I wanted to throw this out here too, just so you're aware of it. This is our playlist for our Trader Talk lists group, and you can go through and really take a look at anybody. You got Connie in here, has got some great stuff. I was going to highlight the one that I've got to on Wednesdays. If you guys like this kind of material, I don't think there's a substitute for the way Kevin goes through his Trader Talk classes. He does such a great job. So, obviously, that's great. There are maybe some additional indicators you could look at if you were interested. It's right sector and market analysis right there. That is the playlist we go through, and we kind of take a look at it as well. I'm just going to throw that in if you want to see that. But I will start adding in those 52-week new charts, 52-week new highs and lows in that Market Watch tab. It just occurred to me during this class, it might be an interesting one for us to kind of focus in on. By the way, you got a K-hold column over here as well too, but Um, so anyways, folks, you've got that. For those of you viewing this in the archives, I will go ahead and throw that too in the chat, excuse me, in the description section so you guys can tap into that too. But this is really an interesting way to take a look in the entire 500, what we've got here. So quick note too, go ahead and throw in the NASDAQ and see what the NASDAQ's been doing. It's going to load up a lot quicker. We've got a fifth of the companies to load up. There we go. So there you go. It loaded up right up for us. Broadcom's in there. Okay. So much of the same one. I think, many of the same ones in there. You got the Google or Alphabets right there. App Lovin, I believe. APP Lovin and Marvell. Let's just do a quick peek at Marvell, MRVL as well. And there you go. Yep, right there. Kind of as we expected over the prior 2 weeks, but maybe a way for you guys to adjust that based upon what the chart's been doing over that time frame, just adjusting it over the weekly time frame to give you a really good selection of what's been moving percentage-wise collectively over that whole time frame, upside, downside, or even side to side as well. All right, let's do this. Let's continue on. We've got a little bit more time here, and let's hit the market forecast. So if you guys are using the market forecast line, now the market forecast is one of those tools that you'll just find on the Thinkorswim site. So it's sort of a proprietary tool that we have here that we just use, but I'm just looking here at the intermediate trim line. That's a long word, folks. So I for short, that's the intermediate trim line of the market forecast. There are 3 lines. We're just going to use that one there as we look at this. Now, this line suggests to us, I'm going to put a line up top here. Shoot, we'll make it blue. I'm going to create a think script though that highlights this for us next time. Honestly, I'm going to do this because this is an interesting one. But if you hold above, I probably made that too close to 100, but there's an 80 line. If you're up above the 80 line, the way traders will use this market forecast line is it does not matter the direction of this line. It can go down, and what it states is that the market forecast is giving the go ahead to take long positions. According to the market forecast, according to the way traders will use the market forecast line. Nothing's a guarantee, but that's how it's used. So you can see over here, you really held a lot of the time, and I think the majority, if not all this time, I might have drawn this line a little high. We were above that 80% line, and look at the strength of the market, okay? It didn't matter if it was going down. You didn't want that to be a false flag or a false signal to suggest that it was going to be weak, because that was a really strong move of the market. How about here? You see that? Aside from this little dip, you got this here too. But there was this dip that said, be cautious, wait. But notice over here, it said pretty much, from this point on, in fact, I'll show you where the actual signal was, bullish all through here. So it's designed to try to capture larger portions of the move. Now, if you are below that 80, but you start to tick up, that could be seen as the same way as bullish. It's not as bullish. There's nothing quite as bullish as it's just kind of redlining above the 80% level and just holding that number, okay, on this market forecast line. There's nothing quite that bullish, but this is a close second. You're actually starting to revert to the upside and going higher. As long as the line's pointing up, and by the way, I got to take it off because it is not pointing up. I drew that in. But if it's pointed up, it's bullish. If it's pointed down, it still says, be careful. Because do not take any long positions in the market. In other words, it's waiting for that confirmation. What could that confirmation be? I know Kevin's got his own little lingo here. What is it? The Horner confirm or something like that. It's an interesting one. It's like the 3 up or something. It's very, very close to, if you remember it, the first 5 minutes of our discussion, the 20-period moving average. Let's go. What am I drawing it in for? What am I doing? I need to just put it on so we can have that memory. There we go, of it. And the 20 period, because a lot of price action, let me show it to you over this weekly, this daily 1 year time frame. Look how much might be in here when we do that. In fact, let's do this. I don't have it on this one. That's cool. That's fine. We'll just go ahead and put it here. We'll leave it as where it's at. So it's just going to be in that cyan color there. Very, very close to it. Look over here. See, when you get above it, I'm drawing it in red. I should be drawing it in a green color here, but there's a lot of price action here. That could be tied into it. Notice the market forecast Probably won't turn up until you get above that level, but that would be confirm 1. That would be confirm 2 over here. Okay, does it mean it's going to go higher? No, but we're trying to get uh, more sort of estimates that it could go higher according to the way a trader might use these, if you in fact decided to use it. Now, one quick note is I have to go through this to point it out, folks. If you are below the 20, and I'm going to have this set up as the Think script as well, below the 20, it doesn't matter what direction that line's going. It is negative, and you do not touch it if it's below 20. But if you break above that 20, right through here, we're not below 20 right now. I'm just giving you another way to explain this. I want to give you all the sort of rules that some traders will use on the market forecast intermediate term line. You get above that 20 and you're pointing higher. Well, it's just like this pointing higher. As long as you're above that 20, it can be construed as a positive. I'll say a smaller positive sign. If it's up here, traders a lot of times will see that as a larger positive sign. Doesn't mean the market still can't, go down. They can. I'm just stating, but I'm just saying if it's showing strength, a lot of times what you're getting with this is you're getting the trend going higher, the trend, higher highs, higher lows. And we kind of need, another high here to confirm the trend because we did make that new low. But an intermediate confirmation of that could be a close above the 20 period moving average. All right, everybody. Hey, if you like this presentation, be sure to subscribe at the bottom to the channel. If you like this specifically, I'd really love it if you hit the like button. It's good to be here with you all today, sitting in for Mr. Horner. He sat in for me many times. I really appreciate it. And yeah, folks, would love to wish you all a happy holiday season. Merry Christmas. To you, I saw that in the chat and looking forward to it. Let's see. Is market forecast a script? Daniel, it is not. Let me just show you that real quick before we wrap this up here. The market forecast is an indicator. You just need to make sure you're selecting just the intermediate trend line. So if you go up top here, we'll type it in market forecast, market F. Market F should do it. Yeah, you got it right there. And what you're going to want to do on that is go to your gear and then just select. You'll notice there is a momentum line. There's a near-term line, which is a different way to trade short-term. But the only one I would select is the intermediate term line there. And if you got that intermediate term line, you're set because that's the one we're looking at. This is the longer term one. These are very, very short term, very, very short term. And there are different ways to trade those. I'm just looking for kind of a market direction so that as you look at those individual stocks that we talked about, that we looked at on our sectors, looking for strength in there as well. What does the market say too? So you're getting confirmation, you're trying to get confirmation or indications, I should say, from the market, from the sector, and finally, folks, the company itself. And so hopefully that was a basket of tools that you guys can utilize to do that. Again, love to have you follow us. Oh, Connie's posted it in on X, Mike Fairborn CS, and Connie Hill CS. All right. Well, terrific being with you all. Again, wish you all a very Merry Christmas. And thank you so much, Connie, for your help as well. Great to have you all on board, folks. See you next time. Kevin will be here. Bye-bye.